Breaking news. Political insiders say the president is about to fire the Fed chair. Interest rates will likely plummet.
That newscaster may have been fake, but what she was saying was definitely not fake news. In fact, Bloomberg just came out with a story saying that White House officials say that Trump is likely going to fire Jerome Powell very, very soon. So the question becomes, what happens if Trump does the unthinkable and fires Jerome Powell? What will happen to the 10-year Treasury rate, dollar, economy, stocks, gold, crypto, etc.? I'm going to do my very best to answer that question for you in 3 simple, fast steps. Step number 1, let's go over exactly what Trump wants. Like, why is he firing or considering firing Jerome Powell? We look at a chart of the FFR, Fed funds rate. So this is the overnight rate the Fed actually controls. The chart goes from today's date all the way back to 2006. On the left, we go from 0% up to 6%. Back in 2006, the Fed was increasing rates up to 5.25%. It's kind of an infamous number. More on that in a moment. Then they pause, and you guys know what happens next. The GFC, and they take rates all the way down to 0. They stay at 0 to right around 2016. They start going up and up and up. We get another pause. We get the cerveza sickness, and prior to that, the repo blow up. Powell starts dropping rates. We hit 0 again. And then here we go straight up, almost parabolic, to that exact same number, 5.25% that we had just before the GFC. A little eerie, isn't it? But then the Fed cuts by 100 basis points to where they are right now, right around 4.25%. But Trump is looking at all these other central banks, such as the ECB, and he's saying to himself, they're at 2% and we're at 4.25%. And in Trump's mind, just whoever has the lowest interest rates, that's who's doing the best. That's who has a big edge or a big advantage. So if the ECB is at 2%, well, then Trump obviously wants rates lower than the ECB because that means that the United States is winning, or at least in Trump's mind, that means the United States is winning. So he came out the other day and said that he thinks the Fed should drop immediately. In other words, cut rates immediately by 300 basis points. That's 3%. So that means that at the next Fed meeting, Trump would like to see the interest rates, Fed funds rate, go from 4.25% all the way down to 1.25%. That is an unprecedented move that would completely shock the markets. So then we go back to trying to figure out what on earth would that do to not only interest rates, the dollar, asset prices, but maybe more importantly, the United States economy. Step number 2. So now let's try to answer the question, what on earth would happen if Trump gets his way? And actually, before we get into it, we got some breaking news. I said in step number 1 that Trump wanted interest rates to go down, at least the Fed funds rate, by 3%. I guess I was wrong, because we just have this story come out from Fox Business saying that, number 1, Trump called Chair Powell a knucklehead, which is no surprise, classic Trump there, right? But he's saying that he doesn't want interest rates down by just 3%, which would take it to 1.25. He wants it below 1%. So that could mean 0.5, that could mean 0, that could be negative interest rates. And just to put this in context, the biggest interest rate drop we have ever seen from the Federal Reserve was 1%. And Trump wants a minimum of 3 times that in one go, one swoop. That's how extreme this is. That's what we're talking about. All right, let's get into how this would impact, first and foremost, interest rates, the 10-year Treasury yield, because that's the interest rate that is most important for the overall economy. So let's start by looking at a chart of the 10-year Treasury yield. And I know a lot of people right now are probably scratching their head and saying, wait a minute, George, why are you even going over this? if Trump drops rates or has his yes man that he puts in the place of Jerome Powell drop rates by 300 basis points, of course the 10-year Treasury yield is going to plummet. Maybe, but maybe not. Let me show you what I'm talking about. We zoom in on September of 2024. Why is this important? This is when the Fed started dropping rates, and they took rates down over the next couple months by 100 basis points, or 1%. So what did the 10-year Treasury do? Did it plummet? Did it drop? No. It actually went up by 100 basis points. It did the complete mirror image of what the Fed did. The Fed dropped by 100 basis points. 10-year Treasury went up by 100 basis points. Why is this? Because the Fed really doesn't control the long end of the curve. The long end of the curve is all about growth and inflation expectations. You guys know that from watching my videos. So the Fed was dropping rates, but the market saw that as potentially inflationary, so the 10-year Treasury yield goes up. So if we're trying to think through, and again, there's no certainties, there's only probabilities, but when we're trying to think through the highest probable outcome for the 10-year Treasury yield, if Trump drops rates by that much, you have to start by saying, okay, well, what does that do to growth and inflation expectations? And as long as the economy or the view, the perception of the economy by the marketplace is the same as it is today, I think this is an unknown. I could make just as good of an argument for the 10-year Treasury yield going up as I could for it going down. So this is basically a coin toss. Let's go over to the U.S. Treasury yield curve, and we can see right at the front end here, FFR right around 4.25%. This goes up to the 2-month, and then we go down to the 2-year, 3-year, which is trading right around 3.85, 3.9%. So now you'll notice when we get to the 1 year, then to the 2-year, 3-year, the curve is actually inverted, which means these longer term interest rates are a lot lower than the Fed's overnight rate right now. So you have to ask the question, if the Fed drops in their next meeting or the meeting after Trump fires Jerome Powell, are they going to drop all the way down to 1% or lower in that one meeting? If they don't, if they go down to, let's just say 3%, does that really have a huge impact on the 2-year Treasury or the 3-year, this part of the curve that's already below 3.9%? It probably would, but I don't know that these rates would go down to the same degree to which the rates went down at the front of the curve. In other words, the Fed funds rate. So then, like we said, the 10-year Treasury is just an unknown based on the current market expectations for growth and inflation. Now, my base case would be the 10-year Treasury would probably come down a bit. The 2-year would go down even more, but the front end of the curve would go down the most. So now let's try to think through what happens to the economy. We've got a chart here of real GDP, which is a broad proxy for how well the economy is doing. Most of you know that in Q1 of 2025, we actually had negative real GDP. Now, there could have been a lot of abnormalities, a lot of variables here that we might not see again, but this in and of itself is a bad sign. This means the economy isn't doing well. So if we get the Fed funds rate down to, let's say, under 1%, what does that do for the economy? I don't know that it does much, because if we go back to the yield curve, we know that the Fed's really going to be impacting the front end of the curve. And although those interest rates are very important for big corporations and, let's say, multifamily apartment complex landlords that are rolling over their debt, it really doesn't impact the average Joe and Jane to a large degree. That's more so the 10-year Treasury yield. So if they drop down, then what does that do to growth and inflation expectations? I don't know. Like we saw in September of 2024, that could make the 10-year Treasury yield actually go up, which would not be a tailwind for the economy. It would actually be a headwind for the economy. So now let's go over to the dollar, and I'm much more confident about what would happen here. Currently, we're trading, we'll use the DXY as a proxy, at 98.71, which historically is actually pretty high. But I can assure you, with 99% confidence, again, there's no certainties, that if Jerome Powell is fired and Trump gets a yes man in there that takes rates below 1%, especially if he does it really, really quickly, the DXY is going to plummet. How low could it go? I would not be surprised if it traded in the 80s. For sure. Maybe the low 80s. I don't know, maybe even the high 70s. Somewhere in the range where we were, let's just say in 2008 or maybe 2010. So why is this? It's all about interest rate differentials. Now, usually the overriding factor for the dollar is the monetary system. But in this case, it's so extreme. It's such a massive move that is really unprecedented. The fact that the Fed is dropping down to, let's say, 50 basis points and the ECB is likely still at 2%, that interest rate differential would have a big, big, big impact on the United States dollar, or in this case, the DXY. So now let's go to the gold price, where I would have just as much confidence giving you a prediction as the dollar. And this would do the complete opposite. Dollar would crash and gold would skyrocket. I would not be surprised if gold went straight to 4,000. And to keep things short and sweet, I think the stock market would do the exact same. I think the NASDAQ would absolutely rip higher, would go parabolic. I don't know how high. And then I think crypto, especially Bitcoin, would probably do the exact same thing. So now the question becomes, what are the probabilities this actually plays out? And that's what I'm going to get into right now. Step number 3. So what are the odds all of this craziness actually unfolds? Well, this is actually very easy to answer. We go to the marketplace. The marketplace is always going to know a lot more than George Gammon. That's for sure. And we have a chart that goes from 2.25% up to 4.25%. And on the left, well, this would give us our odds from 0% up to 100. So what this is telling us is where the market thinks the Fed funds rate will be in July of 2026, not July of 2025. So in 1 year's time, looking forward, where does the market thinks the Fed funds rate will be? Well, you can see the winner right here at 28%. That's the highest probability. And this is 3.25%. So 1% lower than where they are today. You see, we go all the way down to the lowest reading is 2.25%, and that's only at a 0.4. So you've got to imagine that anything under 1%, the market is attaching almost a 0 probability to. Now, does that mean there's a 0 probability that Trump won't fire Powell and put in a yes man like Besant to drop rates down to 0 or even negative? Absolutely not. Remember, at the end of the day, we're talking about Donald Trump. And whether you think he's crazy or he's playing 6D chess or whatever it is, we know that he is extremely unpredictable. So I know a lot of you right about now are probably saying to yourself, okay, I get it, George. There's a very low probability this happens. If it does, who knows? 10-year treasury rates, it's all about growth and inflation expectations at the time. Dollar would crash. Economy, probably wouldn't do anything. The economy's going to do what the economy's going to do. But stocks, gold, silver, crypto, to infinity and beyond, baby. They're going to the moon, Buzz Lightyear style. So then you say, well, what do I do about it? How do I set up my portfolio? I've got good news for you. If you check out the link in the description below this video or in the pinned comment, you'll be able to subscribe to my free weekly newsletter. These are the highlights of everything that we're talking about in Rebel Capital's Pro. This is the online investment community I have with Lynn Alden, Chris McIntosh, Brent Johnson, Patrick Ceresna, and Jason Hartman. You can subscribe totally free, and weekly you can get the highlights from Rebel Capitalist Pro, which basically our contrarian strategies, trade ideas, and macroeconomic analysis. You definitely can't beat the price, so go ahead and click that link, go over, subscribe, and I will see you inside the next Rebel Capitalist Pro report.